Hello, my name is Mike Acton. I'm the head of research for AEW Capital Management in the United States. AEW is an investment manager who specializes in real estate only. We've been in business since 1981, so celebrating our 40th anniversary this year. And we invest across the entire equity spectrum, all the way from core strategies up through opportunistic. We also invest in actively managed real estate securities portfolios. And we also are a direct lender in property. So today we're talking about essential housing, and people often ask, what is essential housing? To us, essential housing is housing, rental housing in particular, that is affordable to low to moderate income households. So what's special about that particular group of renters? Well, these are people that earn income that in most parts of the country simply don't provide them many choices for housing. Housing is very expensive, as we know, in almost all parts of the country. Almost every metro, county, city in the country, if you were to talk to local planning people today, policy people, you'd hear that housing is one of their biggest issues, affordable housing in particular. So essential housing is typically occupied by people who are, believe it or not, filling essential jobs that we all come to believe are essential, particularly over the past year. This might be people working in healthcare, in food service, keeping your grocery store open, keeping your emergency room functioning, things like that. They earn incomes that only allow them a very, very limited set of choices in their local area. And as a result, these properties have really desirable characteristics that we'll get into as we talk more about this. The key demand drivers for investment in essential housing today are really two things. One, it provides a very stable source of income for investors. That's a very tough thing to find today in this world of very, very low interest rates, very low government bond yields, and so on. So many investors are looking for good, stable income above what they can get in other fixed income alternatives and so on. The other thing, of course, is that our investors, institutional investors today, have a very large amount of capital that they're trying to put to work. Their allocations to real assets are growing, and their portfolios as a whole are growing. So the result is an awful lot of money trying to find a place to invest. The thing that's really interesting about the essential housing portion of the rental housing market is that it's extremely large. It's more than 2 or 3 times bigger than part of the rental market that institutional capital typically invests in, what people might call Class A, or the higher rent, the higher tier of the rental housing market. So you have a very, very large market that can absorb a lot of capital, and it's a segment of the market that really doesn't get much capital attention at all. So we think the opportunity is very large for many, many years to come. Essential housing tenants are tenants just like any other tenants in the housing market today. These could be families, they could be households of unrelated people, it could be individuals. They typically work in jobs that more or less require them to actually leave their house every day. These are people that are providing essential services. They're the people keeping vast parts of the economy operating, people working in food service, in hospitality, in health services, a whole host of industries. The incomes they earn, unfortunately, are not high enough to afford many choices in most parts of the housing market in most parts of the country. The units that are affordable to people at these income levels stay full almost all the time. If you have a rental housing that is affordable to you, that works for what your family, your household needs. And what I mean by that is it's on the public transportation route that gets you to your job, or it gives you access to the elementary school you want your children to attend, or perhaps it's close to where your elderly parents are being cared for. You're not going to give up that housing situation very easily because it would be very difficult to replicate in almost any micro location that I can think of in any city, metro area, county, really almost anywhere in the United States. So if you were to somehow lose that unit for some reason, you might have to move 5 or 10 miles away to find a comparable unit that is also affordable to you. There's the occupancy rates are simply that high in this segment of the housing market. There is today in the United States, and has been for many years, a structural supply and demand imbalance in the essential housing segment of the housing market. And what I mean by that is the number of households, families that are looking for these units far exceeds the amount of the housing stock, the rental housing stock that is available at these price points, these rental levels. We estimate today that difference between demand and supply is probably between 7 and 8 million units nationwide. In some markets, it's extremely acute, as you could imagine. And in some places, it's less acute, but still exists. Housing economists, people who study housing markets, typically refer to what they call the housing cost burden of households. And what's meant by that is if you're spending more than a certain percentage of your income on housing costs, you are considered cost burden. And by definition, that means you have less money available to spend on all the other things that your family or household might need. So the typical threshold is about 30% of income. If you're spending more than 30% of your income on housing, you do not have enough money available in your budget to spend adequately on healthcare, food, clothing, transportation, education, all of the other essential expenses. Today in the United States, just about half of all renter households are considered housing cost burden. And this ranges from the very expensive coastal gateway markets where the share of households that might be cost burden are probably well above 50%, maybe to some other places, more inland locations, more center of the country locations, where maybe that ratio is 20 to 30% of the households are cost burden. But the problem exists literally everywhere in the United States today.